welcome to the Off the Balance Sheet podcast. So the purpose of this podcast is to speak to CFOs, high grade CFOs, to gain insight into their world, understand why they're so critical to the success of a business, and hear real stories behind the spreadsheet. I'm Alex, founder of Harper, and today we're joined by Jon Sturgess, who has a wealth of experience within the wealth management world. Primarily, his last role was a CFO at a wealth management business, so high growth wealth management business, private equity backed. He's got 25 years experience across practice and industry. Has been involved in multiple PE transactions. Has raised tens of millions in debt, and has built seriously high performing finance functions, alongside delivering some kind of major system transformations. So Jon, welcome to the show. Great to have you on board. How are you getting on today?
Yeah, good, thank you. Make that sound very exciting, which being a finance person isn't always the case.
I hope the intro does you justice. I'm sure it hasn't, but I hope it has.
It has. It'd be nice to have that every time I enter a room, someone to say that.
So I guess kind of question one, which is quite broad, is, in your opinion, what do you think makes a great CFO?
Yeah, look, I think a great CFO is ultimately the right-hand person to your CEO, MD, founder, chairman, whatever role they undertake. But it's being that kind of business partner to them. I've always felt in the roles that I've done, whether it's as progressing up through towards CFO, anyone in finance really needs to be very strong at this business partnering skill set. But I think a CFO, a successful CFO, needs to be able to really business partner with the other senior board members, and have that ability to ultimately say no. And I kind of caveat that with actually what I've always said to myself is, you're not actually there to say no. You're there to say, maybe not now, but how do we make it work? So definitely more in founder-led businesses, I found that your CEOs and chairmen have been very entrepreneurial and come up with ideas. And then they want your guidance and your counsel on these ideas, which actually are very great, but a business is normally on a 5-year plan, especially within private equity world. And some of these ideas may be things that you don't want to put onto the table now at this point in time, and may want to do it as we come into a transaction or an event, or actually where you've got some further funding behind you that you can do these ideas. So that's why I say it's not a case of us saying no all the time. It's really trying to figure out the best ways and the best times of making some of these fantastic ideas really meaningful to the shareholders, and actually really meaningful to the business at the right time.
Well, now we're on that train of thought, then I'm going to flip the script a bit on the structure of these questions. And I would say, like, in terms of your experience leading on from that, what do you think the importance of systems and data within that decision-making process?
Oh, the systems and data are absolutely phenomenally crucial. I've been involved in boards whereby they got the wrong data, and that data is coming from inaccurate systems or inaccurate data collection. And that has caused problems. Wrong decisions have been made, and therefore you end up in a position whereby the board is not able to make the right decision for the business and for the shareholders, and that is really tough. I think that I was talking to a business actually the other week, and they're in the wealth sector and very early on in their journey, and I was talking to the operations director, and we were back and forth quite a bit about the data collection and what you find in businesses. I would imagine most sectors is that the data that's needed by an ops director is different that's needed than the CFO or a compliance officer if you're in the wealth sector. So the big thing for me and what I've delivered in the past has been project led, where you're actually spending a huge amount of time across the business trying to understand what everyone's level of KPI needs. So we did a big project within AFH when I was there and rebuilt some of the data collection, where we started at the top and said, right, CEO, what data do you want to see? And then worked out how that flowed down. So did a top-down approach and worked it down for as low as physically possible without over-engineering everything, and actually created some really powerful data to a point where you end up in a position whereby your sales director may have information about clients and advisors on a regional basis. That data feeds up to a CEO who wants to know how many people have we got in the north and how many people have we got in the south, as an example. Where so that exercise of spending a huge amount of time going into CEO, what's your needs, sales director, what's your needs, PA to the sales director, what do you need to make your job easier? And then actually what you then find is that the data that comes out and is presented in board reports can be challenged and can be driven down. But actually, if you spend the time focusing across the whole, I suppose, senior management team and management team below, you're making everyone's life easier, and then everyone's actually reporting the same number, because that's a very common problem that I've seen within the wealth sector, is that the interpretation of data may drive a sales director to say this is the revenue for the month, and as a CFO, the numbers I've reported will be different than that sales director, and it's then understanding that difference. And part of that difference is the simple things, accruals accounting, but you need to be able to articulate it and reconcile it back to, this is what the sales director says, this is what the CFO says, and these are the differences between the two.
When you joined, were they all singing off the same hymn sheet in terms of these numbers? Like in terms of, I guess, from an SMT or board level perspective, I guess that would include the sales director. Did they have like, these are the figures or these are the KPIs we're looking at? Like, was it always structured like that?
Yeah, I think both the businesses I've worked in with the wealth space have been on a journey. And therefore, as they've gone from 10 million turnover north and quite significantly north, what you found is that through growth, everything changes anyway. So at probably a smaller stage, size of revenue, the data probably was more manageable to be explainable and manipulated. And then suddenly over time, as it grows, and you've got extra businesses, extra acquisitions are coming in, acquisitions that don't transfer all the assets into the business and maybe running as independent, all of those anomalies start appearing. So I think it's always a case of, for me, once you fix the data and you think you've got it right, you can't rest on your laurels and leave this, because actually something will change within the business that will then change the data. And whether that's a new revenue stream, a new product, or whether it's a new acquisition coming in that's feeding data in separately, all of those things change that data pool. And if you're, I suppose, AFH as a business, when it got to the size it is or was when I stepped away, it had a data team and it had an IT architect behind the systems who was managing all of those. So therefore, you've got bigger and better skill sets that are looking at these and understand that if you change that in the system, this is the implications. Whereas I was at AFH for 8 years, so at the start, they didn't have that level of resource in the business because it wasn't of the size to accommodate that. And therefore, those changes would happen, and it's for everyone else to try and figure out. So I think for me, it's about, as you go on that journey, never forgetting that your data may change for whatever reason, And that could be something as very simple as an operations manager says, we don't need to tick this button anymore on a process. It has ramifications on your data, and you've got to be very clear on that. For me, I've been a big advocate of everyone in the business has got to own and have responsibility for the data that exists in the systems. Because if they do something different, it impacts things. And that goes from, like I say, not just ticking a box or not ticking a box, just typing date of births in. If the system gives you the ability to type 1984 as a full number, but also put 84, if the data collection is not collecting that properly, that could cause an issue. So I think that it's really key that every business is thinking about data today and data tomorrow.
Yeah. From a structural point of view, from inception, I guess, when you're feeding data in, thinking about what the implications could be in 12 months if you don't do it right from the start. Because it's always more difficult to go back on something and try and fix it than just to get it right at the start. And presumably that's what good senior finance leadership looks at, as well as high level KPIs and that sort of thing, is sometimes getting involved at that granular level.
Absolutely. I think if you, as a CFO, if you can't roll your sleeves up and get stuck into that sort of output and understand what's going on, you're probably not going to be the best person to support the business in driving that forward, because you could be sat in a board meeting and someone could ask you a question. If you don't understand how that's being collated, then you've got a real challenge. But it is difficult because it's a CFO role is wider than just data. There are other compliance and statutory reporting and other roles that we've got to do. And as businesses get larger that you've been involved with, there's more employees in your team and things like that. So you talk about building successful teams in the intro, but really actually it's about finding those right people. It's about finding the people that can understand that data as well. And I think that's where I've been probably successful with some of the stuff, whereby you've got good people around you as well who complement some of your strengths, but also complement your weaknesses. Because if you're running completely solo, I'm working at the moment as a fractional CFO with a business where I am the only person really in finance. There's bookkeeping ongoing in the background, but interpretation of the data is really just sat with me. And that brings its own challenges, where you've got to draft, review, and approve, and then sat in a board meeting where you're being challenged on your numbers. Every pound and pence that's flowing around. So that's obviously easier in that concept, but it brings its challenges.
Yeah. Okay, so it was really good that we did it that way, but I just want to go back to now your career journey. So for listeners out there or viewers out there, aspiring CFOs, how did you get there? What was your journey from your first role in finance to CFO?
Yeah, well, I fell into finance in reality, but actually I feel like it's a good fit for me and my skill sets. But I was very lucky, actually. I made a decision very early after finishing my GCSEs that I didn't want to carry on A-levels and university. So I made the decision to find a career that allowed me to train in an apprenticeship scheme. And at that point in time, I was able to do the AAT qualification and was very lucky to find employment with Baker Tilly and go through that training program. And that was really cool for me because I'd come from a small town and I was doing what we used to call back in the day brown paper bag jobs, where you're collating invoices and typing them into spreadsheets, or in those days actually we were writing some of it in ledgers. So I'm showing my age there, so apologies, but the grounding that I got was very good. So double entry was really a key understanding and concept for me, and even something that today I go back to. Whereas some of the guys that I've trained with over the years who hadn't done AAT and hadn't seen that basic bookkeeping have maybe struggled with some of those things. So I found that I lucked out really a little bit. But part of it is you make your own luck, and I then pushed myself to go and work for the Big Four. I've got my head around accountancy and audit world, and thought, well, Baker Tilly was great, and the office in Yeovil was fantastic, and the people were great. But actually, I wanted to challenge myself and stretch myself further. So I was very lucky to get employment with EY, and did effectively the what was there back in the day, their AT qualification process. So I studied ACCA along a cohort of probably 30 or 40 people in the Bristol office across their ACCA qualifications and ACA. And that was really good. I was very lucky again to work across, being an AT, work across multiple clients, which I really loved. I really enjoyed. Whereas some of the AS guys who were studying the ACA spent a lot of time working on their larger clients and probably only have one or maybe two clients across the whole year, whereas I was sat there with probably 20. And that enabled me to push on and stretch myself because you were seeing so much more. And I loved that about the job that I was doing in Bristol. So I progressed and ended up getting towards manager at that point in time, and moved across a few different offices for various different personal reasons. So I was very lucky because I went from Bristol, which had an FS background, also had a lot of US GAAP clients, so overseas owned, and some local SMEs. I then ended up moving into Reading office, where I did more technology based, and looked at SaaS contracts and various different, again, US owned or local businesses, but started working on some larger listed businesses as well, which again kept stretching me and pushing me, and that's what I loved about my career at EY. Then ended up moving up to the Midlands and working at the Birmingham office, and probably at that point decided that's when I needed to figure out and make the change and sit the other side of the table. But I wanted to give practice one more decent stab. So I ended up working for Bishop Fleming, which is a local practice really across the southwest. Is probably a bit more well known now and larger than what it was when I joined it in 2012, 2013. And really enjoyed it. But again, it was going back to my roots a little bit, and I always had this itch of like, this is great, but I miss the larger listed experience. So ended up thinking about, right, I've got to go and try industry now. If I don't do it now, I never will, and I'll be stuck.
You might end up at partner level, and then you'll never leave.
Yeah. And don't get me wrong, I think that's a very good career and a good position to get to. But I needed to scratch that itch. So I again, lucky to land something right on my doorstep, AIM listed, a war chest to go and buy businesses in the AFH, and actually it only listed 12 months prior, so there was a lot of work that I had to do with the CFO that I joined 12 months after with, and probably recruited as his good solid number two.
That was straight from practice into a number two role.
Yeah, so I was FC when I stepped in there. So there was CFO, FC, and then I had a team of 2 or 3 people underneath me. So very lucky to get that kind of opportunity, like I say, right on my doorstep as well. So it was close to home, and it ticked all my boxes for my personal life and for my professional career. And then actually, when you roll on that eight-year time with AFH, it was absolutely phenomenal because we did a huge amount of acquisitions. I was involved with some of the large deals, some of the smaller deals dealt by smaller teams that just buy them, integrate them into the wealth business. But you still had to integrate the financial infrastructure into the data. Like I say earlier, we did projects on data. We did various different projects to enhance the business in terms of its profitability over my time, and had a great career there. Really enjoyed it, but again, always had that itch to get to and do CFO, and I felt that progression to CFO in a business it's a good step, but you're always still sometimes seen, I think, as the FD or the FC that you were before. So for me, I always wanted to make a move away from AFH to find the next CFO role. And at that point in time, yourself, actually, Alex, picked the phone up to me, and we talked about the Attivo opportunity, met with them, and again, it's another consolidator in the sector. So it was a really sensible transition for me and for the business, and one which worked out really well. It gave me a chance to come in and do that role, help the business grow and do what it needed to do for that next two-year period that I was there for. And then I've been very conscious of not wanting to get myself stuck into financial services. There isn't that many financial services businesses in the West Midlands where I live that I can tap into. So I want to make sure that I diversify myself as an accounting professional and not be stuck in there. So for the last couple of months, I've been making the transition to a fractional role, which I'm running through my own company. And I've got ambitions and desires to grow that to be something more than just me sat here in my converted garage. I would like it to become a business of its own. You look at some of the businesses that are doing this at the moment. You've got CFO Centre, and you've got businesses like Thin, and there are other recruiters that are starting to build their own almost fractional finance function. I see there's an opportunity in the market whereby hopefully in time I'll have some bookkeepers, some qualified accountants on my payroll that are helping service multiple clients through various different transactions, events, or actually just being the general day-to-day. I'm working with a couple of businesses at the moment, a couple of tech startups that obviously don't want to have a big employment burden at this point in time, and like the ability to employ fractional support, which they can turn up and turn down as and when they need it and want it. So it's exciting. I'm looking forward to seeing what this could hold for me. And actually, I think it's really interesting to see how this fractional role could evolve in the sector. I think there's a lot of businesses that could benefit from it. Even if I look back and think about the first few days of joining Attivo, and probably even the first few days of joining AFH, everyone wants their CFO sat there 5 days a week. Of course they do, but it's a very expensive cost to have on your P&L.
It's also like a value add if you don't have anyone else in finance. So, for example, if you've got one bookkeeper and a CFO, you probably don't need a CFO. You probably just need a finance manager to make sure you're getting your management accounts, and that's it. Because the CFO, is put my opinion on it, is the strategic value add. Really, is to get a business from A to B, and also looking at things that the CEO or the board haven't seen. So it could be a cash flow deficit, or it could be a revenue opportunity that a CFO can come in and give comfort to everyone that it's fine. Because the businesses I know, CFOs walk in, they go, I didn't know the cash flow was like this. And the board are like, yeah, this is a real problem. The CFO is fine because they've gone, okay, well, look, this is where we need to go. We need to raise some finance, whether it's debt, whether it's equity, whatever it might be, and we'll be fine. And that's really a great value add. On top of not just talking about the negatives, the positives are, well, you could join a really growing business that doesn't know how to get from, or doesn't even envisage getting from A to Z. And a good CFO who's been there, done it, or seen it can come in and go, actually, why don't we just acquire this, or why don't we raise this, or why don't we diversify into this territory or these products? And that's what you get from a really good kind of hands-on CFO. So alluding back to your point, the fractional thing is like the best of both worlds, because you could really join many businesses at many sizes and add strategic value pretty much immediately.
And you
don't have to cost 5 days. That's not 5 days a week. That's the thing.
No, I agree. I think the thing is there's many good, solid FDs out there, and in reality, an FD can come in and do the management of the team, and they can do the delivery of the management accounts. The interpretation and the strategic thinking beyond that of a business, that's where a CFO comes in. And there are many people, I think, in the sector who, well, not the wealth sector, but generally CFOs, FDs. There are many probably CFOs that are called a CFO that are doing an FD job, and many FDs that are doing a CFO job, and it gets interchanged a little bit. But actually, in reality, you could find something that, you can offer a service as a CFO whereby you're not involved in the production, you're not involved in the kind of the day-to-day aspects. You're actually involved in what does this tell us? What does that cash flow really mean?
Yeah.
And a good CFO will tell people the truth. But again, across my time, specifically more so within audit, I've seen many FDs and CFOs not able to deliver the truth because they're also thinking about the fact that they've got to get paid themselves. They want their salary, so they don't actually sometimes want to say no, or put that challenge up to go, I don't think this is a good idea, because it has implications on them. It's human nature, that they've got their mortgage to pay or their kids' school fees to pay. These things happen. So
I just want to go back to your career, actually. So just a couple of questions on that. So I'm really interested in your move to AFH. I think and obviously this podcast is directed to everyone, but actually coming from an audit background, did you know AFH were going to do that? Like, what were the green flags that you were like, or did you just go into it blind, being like, oh, great, it's an FC role for this company. That sounds great. But actually, did you have any inkling that they were going to do this journey?
I'd done my due diligence on the sector. I was very specific about what I wanted. Having gone to Bishop Fleming and worked with some fantastic SMEs, don't get me wrong. The thing that I noticed was this growth journey that was just probably missing with some of their client base. And they had fantastic clients, but they've bought 10 fixed assets, they sold one. That's got to be worked through, and you're presenting an end of year audit report to the CEO and if there's other board members, and talking about the fact they've gone and bought a couple of assets, and that's what's changed, and revenue's been very stable. So I'd done my due diligence on AFH when the job was put across my desk, and also then the sector, which at the time consolidation was quite new. Had only been going on really for a couple of years beforehand, but there were some big players getting to a point of there. So I knew that it was exciting and knew it was interesting. Spoke to a couple of connections that I've built up over the time who compared it to the estate agents consolidation process that kind of went through in the 90s. And again, did my due diligence on that to see, well, what could this look like for me? And when I sat with the CEO and the CFO to have kind of part of the interview process, I knew the questions I wanted to ask is, how big do you want to take this? And, look, CEOs and founders want to be this big. And that's great. Be full well that it may not be this big, but it may be this big. And that's still really, really exciting. And actually, I could see from what I thought was going to happen in the sector and talking to the business and what it needed, and understanding things like you're on a Sage accounting system as a 10 million turnover business that wants to go and buy businesses and report on those businesses that you're buying. That actually there's going to be system implementations, there's going to be growing pains, there's going to be areas for improvement, there's going to be data issues, there's going to be reporting issues. So I could see very quickly from talking to the business and talking to the CFO and the CEO that this was going to be a very exciting journey. So I was very, very, very keen on it, obviously, and very lucky to have been offered it. And then obviously it flew, which was cool.
Unbelievable. That route to CFO is, it's not really, really unique, but you picked the right business And that's like catapulted you quickly into that level. Because it seems like AFH were basically ripe to join because a they had investment, they were doing this M&A journey, but on top of that, the role that you went in at was direct under the CFO, which is
Yeah,
quite
yeah,
unique for an audit leaver to get that type of position. But then I also understand it because they weren't that big at the time. So those roles happen more often than people envisage. Is they do just take someone from audit as a kind of finance manager stroke FC as a number two to the number one. Um, but then to get the growth at AFH, that's really helped. Like you grew your role with the business as opposed to the business having an FC, you then moving into that role, then moving up to the FD role, then moving up to where you were now, which was a CFO role at another business.
yeah, yeah.
Um, it's actually interesting to know how you did that. It must have been just good, good feel, but good mentoring as well, because someone must have said that's a really good business to join.
Yeah, look, I think the CFO who interviewed me and is still in connection with now, good friends, he made it very clear that he could see the excitement that this business could go on, the journey could go on. And therefore, when you're hearing that, like I've been through interview processes before and I was interviewing with other companies at the same time, you quite often chat to a CEO who gives you this fantastic
The
story
dream, yeah.
and the dream. Yeah,
Yeah.
yeah, yeah. And then you might be interviewed by a CFO who sometimes tells you probably the truth or
Yeah.
reins it in a little bit. But you could see that. And look, they're just listed on the AIM and they had a war chest to go and buy businesses. So I knew that even if I stayed there for the next 2 years and did 5 acquisitions, that's
So
5 more acquisitions. Someone who's just gone to be an FC in a standard manufacturing business in Worcestershire that isn't buying anything is 5 more on my CV than it is on theirs. So, and that sounds a bit arrogant, but in reality, I wanted to put myself in a position where I was expanding the CV. So I was getting
no,
AIM listed experience, I was
that's
getting
actually
acquisitions experience. You know,
such
it
a
was all
critical
growing
point
it.
that you raised there is such a critical point is you talk about your CV like it's your portfolio of your experience. And we see a lot in what we do, obviously in financial recruitment, is sometimes candidates are like anxious or have doubts about joining a company because it's maybe in such flux. Whereas actually, that is an asset to your CV. Like I would always urge a candidate to join a company in flux. Um, whether it be good, hopefully a lot of the time good, sometimes it's bad, but also taking that experience and saying, well, I can deal with that now. I still got paid at the end of the month, but dealt with cash flow issues left, right, and center, not paying
Yeah.
suppliers or whatever. That still adds to your asset, which is your CV. And that
Yes.
people, I would urge everyone to look at their CV as their asset base, is like it's their career journey, but also you get this knowledge. Like you said about the double entry thing, I found really interesting was actually writing in a ledger. Um, I've dabbled in accounts when I was really younger in my career, but my dad was an accountant as well. And he used to say, no, I literally had to write in ledgers. I literally had to write out corporate tax returns. I literally had to write out PAYE returns monthly, just on a
Yeah.
back
Yeah.
of a looked like a checkbook back in the day. Those returns, I remember him doing them, and it was like that actual grounding is amazing for future roles as well because AI, all of that can come in, but actually you still know how the numbers are hitting the page, like literally hitting that page. Um,
Yeah, I think I was when I went to college to do my AAT. There was a tutor, Clive. Isn't it? He still sticks in my brain because he always used to say, "If in doubt, draw an account," and he means a T account. And it was one of those where you kind of like, I was 16 to 19 going through that phase. So there was a group of us and we probably giggled and laughed at it at that point in time. But actually, I know that I've used that phrase as I've gone on to coach and mentor people and train them and bring them on. It's like, look, just draw it out. It's takes seconds for you, and AI is an area that's going to be really interesting for this sector, but actually it could be a massive hindrance because these trainees coming through potentially could lack some very basic
Yeah,
understanding. You
that's
know,
true.
even running my own business now and using Zero does so much for me, and some of it just happens, and it's phenomenal in one sense because it saves me time.
Yeah.
But on the flip is, you do sit there and like, I need to just go and have a look at that, and my brain goes, I just want to check that they've done that right, even though it's a system that's sold to me as being able to do this. And that's quite interesting, but it does worry me. AI as a technology coming in to not just accountancy. I've got young children that are going to be brought up with this in and around them, and already do. They use some crazy stuff at school that is AI,
Yeah.
and are the children of today going to come through and to be a worker and actually understand how something is done? And I hope we don't lose that aspect within the education piece. I think ACCA, ACA, AAT have all got a responsibility to make sure that AI doesn't remove that knowledge, and that's quite a big responsibility.
Well, now we're on that topic. We'll stick with it. So another kind of key question we had in this podcast was the rise of AI in finance. Like, and honestly, be as kind of carte blanche as you like, whether it's good or bad. I'm not fast. I'm just interested in your view on that, really.
I think probably like uh, most accountants will be quite apprehensive of it in some form, because that's the nature of being an accountant. You look on the black side rather than the positive side. So I think as an individual, I've been quite aware of it, and I remember being at AFH a few years ago when we were talking about writing policies for the use of ChatGPT, and that's just now one of many packages out there that you can use. And even I've talked about Zero, the AI that's built into Zero and other accounting systems starts becoming more and more aggressive in one way. But I think for me, I found the last 6 months I've had to change my mindset towards AI and think, rather than think of it as a problem, think of it as an opportunity. Because go back to the conversation we had about your CV. In 10 years' time, there'll be another CFO who's 10 years younger than me coming through, who's lived through that AI world. And if I don't adapt, that person will be more employable than I will. And I've switched on to that, like I say, in the last 6 months and gone, right, I need to embrace it. I've been trying to spend a bit of time within some of the key AI systems out there to try and understand them better, not only from a dad perspective, like some of our kids that are a little bit older understand what ChatGPT is and what they can do with it. And I've tried to embrace it a little bit. As an accountant, I think that it's only going to make things easier for everyone. I think it's going to potentially hinder some people coming through the qualifications, and that's a nervousness I have. But that's probably me as a bit personal going, well, I did AAT, I understand ledgers, I understand double entry, so therefore you should, as an ACA graduate from a university, and in reality is Zero, Sage, and even the NetSuites and larger products out there do so much work for you. So I probably haven't answered your question, but I think for me it's about embracing it. Now's the time for an accountant to embrace it.
What have you used to actually help your kind of day job currently in the last 6 months?
Um, there's probably nothing that I've used too aggressively in the
Yeah,
last 6 months, and there's many reasons for that. So like ChatGPT, I spent a bit of time with it as I was setting up LRO, and I found some of the stuff very useful and very powerful. So to help write content, I can link it to my website, I can link it to my LinkedIn profile, and you can then get it to write some content and write some posts that you might put out on LinkedIn, or even criticize and challenge what you're saying within your
yeah,
own website. And that's been extremely helpful and powerful for me as a business owner, trying to do all those things when I've never done it before.
yeah.
But probably in terms of the actual day job, not a huge amount,
Could
because
you see it
it,
like helping with system migrations and that sort of thing, mapping data and
oh, phenomenally, yeah,
yeah,
definitely. There's a couple of people that I'm connected with that I see on LinkedIn that run businesses that are tech based
yeah,
and think that kind of development of technology and coding and using AI there is going to be phenomenally powerful. And I think that that in itself will help the kind of financial export of data into a more clearer, coherent
yeah.
version that can then be input into Power BI. But let's be clear, AI is effectively the Matillions of this world that do it already. It's just not badged as a chat GBT. It's a Matillion, and
It's already,
it links
yeah, it kind
data.
of exists, doesn't it, with templates and that sort of thing anyway.
Exactly. What we're seeing with AI now is that actually everyone can get their hands on it rather than
Yeah,
larger corporates. And I think that's where it's going to be powerful for the type of clients that I'm working with. That's where I can see it be powerful for them, is just twisting and manipulating the data in different ways and having something that then, like I say, makes the data more coherent for us. But it's cool and it's exciting, and I love the fact that actually what's happening with this is that it's not just businesses that can manipulate it and use it. You can use it, and we've done some house renovations, and even just taking a picture of our front room and saying, this is what we'd like to do with the fireplace. Can you give us some ideas and suggestions? And it chucks back pictures that,
that's a really good idea.
which is like I was showing my wife it, and it comes back and it's got the same paint color, and it's got like even little pictures look the same. It helps you visualize those things so
Yeah,
much better. So some of the power that it can be used in is probably in different sectors than accountancy as its own. But I'm sure there's probably many qualified accountants there who work in practice still going, actually, there's this that can be done and
it
that can
doesn't
be
know
done.
this. It doesn't know this yet.
Yeah.
And apparently, I think it, no, just reading up on it, I listened to a webinar from CFO of Stripe actually, and he
Mm-hmm.
just said, "Well, look, their their kind of logic is at the moment they use it internally for presenting data, so like getting your presentation notes ready and cleaning
Mm-hmm.
them up and ready for deck, for example, with investors or with your board. But actually, what it's not very good at the moment is numbers. So literally, it
Yes.
does struggle. So you couldn't necessarily, and look, maybe you can, maybe someone has already developed it, but you couldn't necessarily chuck a million lines of data into an AI tool and get it to create a cash flow out of it because um, apparently it's just not very good with it gets muddled up a lot with numbers and obviously that's the most important thing when it
It's
comes
no different than a human aspect,
yeah
and this was definitely some of the challenges I found moving out of practice and coming into industry. In practice, everyone follows the same templates and uses the same methodology. In EY, everyone's trained to do everything the same way. You go into industry, and if I recall back to my time at AFH, I had times where I've been the FD and I've had a CFO, sorry, an FC do the cash flow for me. and they'll produce something, and then you look at it and you go, well, I wouldn't call it that. I would call it this.
Yeah.
And that's the same challenges that I think AI has got right now. That it's learning and it's evolving. What someone might call a certain type of cost could end up being classified as P&L or balance sheet. So the massive caveat that I would say to anyone is, if you're using it, check it, and don't rely on it completely and entirely, because you've got to look at it. And I've used it for some stuff to try and help me set up the business, and then read what its output, and I'm like, it's just misunderstood me, and that's partly because my language of putting it in may not be helping it understand what it's trying to do. And then you can carry on, though. It's really cool because you can carry on having that kind of back and forth, back and forth. And some of the stuff has gone from absolutely awful that I wouldn't put anywhere near anyone to actually this is
really good.
a bit more fine tuned. Yeah. And I think that it'll be interesting to see how it carries on being evolved inside systems and outside of systems, and maybe new packages will come off the back of it, which will help things.
Good. Okay, so last couple of questions, and then I'll let you go, John.
Sure.
So okay, we covered a lot of topics already, but I think the last two are around. I think firstly, let's say you joined a new business. What what are you what's your kind of game plan in the first 12 months of joining that business? And again, that's holistic. There's no caveats. The caveat, if there is one, would be we haven't described a business that you're joining. But as a CFO, from broad brushstrokes, first 12 months, what are you looking to achieve?
Yeah, look, I think whether it's CFO, FD, FC, I think the point you raised there, Alex, is absolutely key. That as you go through any interview process or recruitment process or engagement process, you don't know all the skeletons,
Yeah.
and finding those is absolutely key and absolutely critical. And sometimes they're really easy to find, and sometimes they're hidden. And if I think about one of the clients I've picked up in my new fractional world, the board was very clear, I felt, about those skeletons, but actually what you find is the size of the skeleton, or it's missing a leg. It's the extra things that maybe even they didn't even know and probably didn't know. So I've always got this kind of standard play in my head as entering any job, is that the first 3 months are absolutely critical. The first month,
Yeah.
you've got to find the time to engage with people and talk to them, understand their challenges, understand their problems, and that will lead you to that skeleton that you're trying to find. And then the second month is reassuring everyone around the board that you understand the challenges, you understand the concepts, you understand where the business is going, and then managing their expectations, because that's the hardest thing. Many CFOs, I think, will join businesses, and the expectation is that they can fix something within 6 weeks or 3 months, and the reality is that you can't. And you've got to figure out then whether it's something that needs to be ripped apart and started again, or whether it's you're putting band-aids on it and helping it go there. And for me, data and data collection is an area which, if a CFO is not thinking about in those first 3 months and understanding it, I always make sure I've got a whiteboard in my room so I can draw it up and always go back to thinking about that data, where it's coming from, because it's absolutely key. But the other part is, like I say, is managing expectations. Don't sit there and sell that you can save the world, when you'll find there'll be something that stops that from happening.
Cool. Okay, and last one is actually around kind of metrics. So I think, again, maybe you've joined a business or you're going to join a business. What are the key metrics that are relatively universal that you look at as soon as you join or you are in a business that you're looking to get out of the business and report back to senior management?
Uh, so
Like,
I don't.
is there a playbook that you have that you're like, those are the ones that actually these are my number one priority right now?
So I remember seeing. I'm not going to answer your question, is Alex. So apologies. I'm going to swirl around it
Yeah, that's fine.
and then explain why. But I remember seeing years ago, and I was probably FD at AFH and thinking about leaving. I remember seeing a LinkedIn post where someone put up, who's like, this is a CFO's playbook, the first 30 days. I remember
Yeah.
downloading it and reading it. And I was like, that's just blown my mind. Because actually, it was almost trying to capture every company and every sector and every problem. And actually, the reality is, as we just talked about, is that that playbook needs to exist in your head. You need to understand the challenges, of course you do, but actually, you can't follow the same model. Like if I think about my first week at Attivo versus my first week at some of the clients that I'm working with now, they've gone in different directions, and it's because it's different challenges. Now, are there standard KPIs? Well, of course there are. There are textbooks that tell us there are standard KPIs: revenue, gross margins, EBITDA margins, all of
Yeah.
these things, and they're absolutely the fundamentals that a business needs to report. You should have that locked down. Actually, the value add stuff that a CFO would bring to the table is not a key metric that you've been taught at ACCA or ACA. It's a metric that you're looking at and thinking, actually, this adds value. So you go back to my time at Attivo, planner margin was always a huge thing. It is a big area for us to think about.
Yeah.
And we walked through the door, and as a business, we knew what the total planner margin was. Well, when we went into that and I sat down with the sales team, the regional directors, and had those conversations, they're not really worried about what the total is. Like, yeah, okay, it's probably attached to bonus and it's attached to this, and it gets brought up on board, and someone's got to answer the question if it's increasing or decreasing. But actually, in reality, what they want is that next level down. They want that data expanded. They want to know all of the margins by person or by region,
Yeah.
and then it's then that actually not just here's a number. So Alex, you're the sales
Had they
director.
done that before you joined?
No, not to the level, that we got it to. Like they looked at a more holistic view, high level view. This is the revenue that they're servicing. This is the cost of their salary. But actually, it's beyond that. It's how much money are we paying on their training? There's people that are still going through
Yeah.
the chartered qualification as a cost to us as a business. They're traveling to see clients. Like, let's look at this and then try and interpret it. So actually, when you get to where we got to as a business, we were looking at, this is someone's margin, but actually then this is the heat map of the UK of where they're servicing clients. So you had people that were contributing okay margins, but the margins were lower than maybe other people in the regions because they were traveling further. So even if you take it to
That's
I've
interesting.
presented Joe Bloggs is got a lower margin than the rest of the people in his region. Well, hang on, that's because Joe Bloggs travels and Joe Bloggs is uh, commuting. And then actually, then there still might be a problem because actually what we found is you don't have a conversation. You talk about, so is that individual being productive? Are they going to London and spending a week in London and seeing as many clients as possible in London? Or are they going to London every Friday
Yeah.
because they like being in London and they're staying and having a weekend themselves? And that happens. Like, don't get me wrong, that happens. But it is that aspect of, like, if you're traveling to South Wales in a car for 4 hours, are you seeing 2 or 3 clients, or are you doing that one and then going back 3 months later to see another client who's literally next door? And that kind of productivity is where, real back to that kind of first question. That's where, as a CFO, I felt I added value, where it's going that here's some of the data, and if I overlay it with this data, which isn't integrated, so it doesn't do it for you, and AI would be able to do it for you in if you can get the data out and put it in the right way. But I can interpret it and say, I think this is being impacted because of X and Y, and that's the business partnering aspect of the CFO.
That's
Um,
fundamental because actually and it sounds like, without putting my own opinion on it, but I'm going to put a slight opinion on it. It sounds like the reason they're probably just looking at that figure was because the business was great. Like it was relatively EBITDA like strong, positive EBITDA strong, going for more acquisitions. But actually, that's the time to look at these figures because there will be a period where the business isn't great, or and that's where you actually find the weaknesses in the sales process or the cost process or the expense process, whatever it might be. But that's a really interesting point that they looked at it from a holistic point of view, didn't really understand the split of where the revenue was coming from, and therefore it might have dawned on them post you doing these reports and you also like observing and identifying these problems that maybe the revenue is coming from two regions out of six on the whole, and then drilling down again another tier going, well, why is that? And it's, as you said, it's really not everyone does that. Not everyone goes in and actually goes, Dave in Newcastle is actually traveling 4 hours a day without having a meeting because
Yeah,
his clients are in Leeds. That's not
yeah,
very smart. Like, why
yeah.
don't we localize his clients and it will maximize his revenue? And actually, if you did that everywhere in the business, hard to change a behavior, admittedly. But if you do that everywhere in the business, then your revenue should grow anyway, because organically, because of that. Um,
I think it's I think personally you touched on it and you're absolutely right, is when there's not a problem in the business
yeah,
and numbers are improving month on month or year on year, everyone's quite happy, but it doesn't mean you shouldn't be interpreting data. And I've had times with my own finance teams whereby as a CFO you find that sometimes you stop looking at something because it's under control and it's being looked at from the team. And then suddenly, actually, I found that they've stopped looking at it or producing it. And you're like, why? You've got to still produce it. You've still got to look at it. And that was a learning point for me over that time. Is like, actually, even if things feel okay, make sure you're still thinking about some of those smaller stuff, because that level of data that you've produced to help someone answer a question, and that's what it was at that point in time. It was a question of what is a person's actual gross margin, and then it's like, actually, why is that person's different than that person's? And that's just because you're getting more data together, and then you're interpreting it. And if you stop, you've then got to repopulate the wheel, and that's absolutely key as you go through any transaction or event. Is that
so it's
all of
also
that
about
data is
communication,
there?
isn't it? It's also speaking to Dave and going, Dave, like, is it bothering you that you're doing all this travel? And then,
Yeah,
and
yeah,
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 and that's yeah. Who would want to be a CFO, John? It's a tough role, that. Blimey, it's very tough.
yeah. You've convinced me. I'm going to give it up now.
That's I think that's brilliant. Like I think that's really identified the question actually. So weirdly, we've got to the answer of the question.
The answer of the first question at the end.
The
Yeah,
first
yeah,
question,
yeah.
yeah. Great. Like yeah, I don't have anything else. Actually, I did have one other. So
Go on.
might be sub well, it will be a subjective question, but you go into a company and let's say they've got core accounting function, i.e., management accountants, tax, and all of that. Your first hire, what is it exactly? They don't have a number two, as in an FC, and they don't have a director of FP&A. And let's say it's that size business that could afford it. What's your first hire and why?
It probably isn't a hire that I would just come and pick and go, this is what I've got. The first thing you've got to do going into any team is assess those individuals. What I found so many times, and AFH is a really good example of where I joined and the team evolved, and we restructured that finance team, I reckon, probably about 5 times across the 8 years.
Yeah.
It was never stable. And when I say restructure, I don't mean redundancies and getting rid of people. I mean, actually, James, are you in the right job? John, are you in the right job? Because I need their strengths and weaknesses to play off against each other and put the right person in the right place. And that's the exercise that I did continually through AFH. And when I went into Attivo, I had the board basically coming back to me going, if you need more people, we can sign it off. Because we know the finance function needs to be upskilled. And the first step is, no, let's understand the strengths and the weaknesses of the people that are here today. Is there anyone that's a flight risk, and what does that look like? And then moving some of those people if they need to be. And there's some great guys that I've worked with that are just in the wrong jobs, the wrong job title. And I want to say guys and girls. And you end up having to help them on their journey get to a point within their own career. And some of those people actually, as they go through that career and they end up in the right job, you actually realise that they need to make the step away and leave. And that's quite hard as well. You're going through that recruitment process. I remember working in AFH, and the business was growing rapidly at that point in time. And what I would call my number two at that point in time was a chap who came and said, "I'm thinking of leaving," and said, "I've got an opportunity." And it was absolutely the wrong time for the business. We couldn't afford to lose him. But for him and his career, he was going to start hitting some ceilings, and it was absolutely the right time. And look at him today; he's an FD of a business, so he's progressed on. Now, if he had stayed, he probably wouldn't have got there. So I haven't really answered your question, so because I think it's really about the people and the person, and I've been a big advocate for anyone in my teams making sure that I'm talking to them about their career and where they want to go, because actually sometimes AFH, Attivo, or whatever company it is might be the wrong place for them. And actually helping them, you find that actually it comes back and it helps you in the right time in the future as well.
Great. Thank you very much, John. Really appreciate your
That's right,
time. I
Alex.
think some of that stuff's really good. Like what you've explained there. Not only do I get an idea of you as a person as well, like I think the value add is huge. So I hope this fractional thing goes really well.
Thank you.
And yeah, I'll stop the video there. Thanks very much.
Cheers, Alex. Thanks.